In this video, I'm going to break down exactly how I build a watch list and what you should be looking for when you're building out yours as well. Remember, this is quantum research. This is based on my view, based on my personal journey, not financial advice. If you want to get an insight into what I'm thinking on a weekly basis, I do have a free newsletter. Link to that will be in the description. A watch list is your next idea. Money is always moving, things are always evolving, the markets never stop. Something is always setting up. So I think it's really important because people always focus on improving their process, improving this, improving that. But I think improving your way to generate better ideas and looking at the next idea is something that's really important as well. So you want to know and see where the action is going to go before it gets there, right? That's the whole goal. If you get in there early when under positioning's there, you're going to probably do well, especially if the move's bullish or bearish, whatever you're doing. So these moves do not take, days, they take weeks and months to develop. And I'm talking about long, big swings. I'm talking about, a year move. I'm talking about, multi-week, month, and so on. I'm not talking about a scalp or whatever. I think if you're a scalper, you probably do have a process. You probably have 30 stocks you watch and you'll buy puts, calls, or whatever, when it gets to a certain level, right? So, for me, we're going to be focusing on, those big swings. And without a watch list, you're always reacting. With one, you're always ready. So you're always updating that next idea. And it's that idea generation that should lead to better results moving forward. So you got to decide what's important to you. So I was just listening to Chris Camello on My First Million. So he does the social arbitrage, if we can say it, trading. And he's looking at, conversational data. He's looking at TikTok. That's how he's generating his ideas. That's what's important to him. So you got to say what's important to you. Is it earnings? Is it a certain technical level? Is it this? Is it that? That's what you've got to really be looking at. So, what assets do you find interesting to follow? You want to be engaging with stuff that you are looking at and reading and you find interesting. If you find crypto more interesting than equities, put crypto on your watch list, focus on that, and vice versa, right? So you want to do that. So what are you interested in following? What do you think you can follow well, consistently, daily, weekly, whatever it is? And what fits your time horizon and your style? So a monthly chart investor does not need to watch every short-term, mover, right? Your watch list should match the time frame you're actually operating. So if for me, it's like a weekly chart. Okay, cool, I'm checking once a week. I'm checking every day, but I could check just once a week, seeing what's happening. And what is showing relative strength? What is looking interesting? I've got a certain checklist. If this happens, okay, cool, I'm going to show interest. Chris Camello, again, if some certain things happen, he's going to show interest, right? And everyone who's good and successful will have that. They'll show interest in what's interesting to them, if that makes sense. So have a number you feel you can manage. Some people, I believe on a weekly basis, you can look at loads because you can just skim through once a week. Some people, if they're a bit shorter term, okay, cool, it's a shorter list. It's more of a daily thing, right? So have a number you feel you are essentially comfortable with. So these setups take weeks or months, not days. So patience is needed in a watch list. In my opinion, you're better off adding to your watch list, and this is for a higher time frame perspective, than taking away. So, if you're constantly chopping and changing your watch list, you're never going to have that consistency, and you need consistency in all areas of investing, trading, wherever it is, to not blow up, not lose money, not always be chasing. So you need to have a consistent watch list. So a good setup rarely revolves in a few days. So for me, I know that if I'm going to catch a move in a stock, it's rarely going to be a couple of days. It's going to be weeks, it's going to be months, because that's how I do things. You're doing the work now, so you don't have to rush in later. When you see something, when you hear about something, you're typically too late. We talk about this all the time. So you want to be doing the work now to, okay, cool, what's interesting, what's looking good, what could be interesting. That's where you already want to be, paying attention on. And big moves that, play out over months are the ones I want to be catching, are the ones worth catching, for most people, especially if like a full-time job or something. So these are the things that I look for, and these are like the habits that I have. You've got to be consistent with a watch list. It's easy to chop and change, but if you're consistent and you add into it, you might even have a part of your watch list like not interested, and you can like have a almost like two baskets, and you just throwing them around, right? That could be something, but you need to be patient, and you need to be consistent with how you manage your watch list. So review it and regulate, update it regularly. As we just spoke about. Review your watch list regularly, not just when you want to trade. Like you hear Amazon, beat earnings, it's got a huge move. your ape in? You know, was it in your watch list? Were you watching this for a year? Were you watching this for your whole life? Whatever it may be. Remove assets once they've broken down or they've completed their move. You know, maybe you don't want to completely remove them, but put them aside. Like, okay, cool. I'll look at this, see if anything changes. Add new assets when something catches the eye. You know, if you've got a certain thing you look for, let's say if earnings or whatever gets to this thing and you're going through a stock list, add that into my watch list and so on. That's how you can do it. And you can filter stocks as well through screeners online. That could be another way of doing it. A watch list has got to be like a live document, not a static one. So you don't just want like the same things. And look, it might make sense to you to have the same things over and over again. But if you're doing individual stocks in particular, you want a live document with predefined rules that make it, worthwhile putting on the document. So the verdict: a watch list is your next idea. Money is always moving and you want to be ahead of it. Decide what is important to you and what you find interesting to watch and just stick to that consistently, and then review it and update regularly. And that's it. Watch lists are really important. It's idea generation. It's your next move. It's your next play. Yeah, it's something you've got to probably pay more attention to than you probably think, because you may be caught in the mind of back testing or reading and so on. You want to generate your own alpha, and having a good watch list process is the way to do it. If you want to learn more about that sort of stuff, I have a free newsletter. Link to that will be in the description. I'll see you in the next one.